So good day everyone, we are the group 5, so our topic is all about special shares. So special shares are a type of company share that grants certain rights and privileges beyond those of ordinary shares. So these rights can include enhanced voting power, veto rights on major decisions, preferential dividends, or control over key aspects of the company. So governments or founders often use special shares to maintain control over strategic decisions or protect national interest. So there are following 4 types of national wealth with the corresponding collecting agency. So we have particulars. So first is forest charges. So the collecting agency is Department of Environment and Natural Resources or DENR or OSEC. So the next one is royalties and mineral reservation. So we have collecting agency, DENR Mines and Geosciences Bureau. Then the third one is energy production resources. So the collecting agency is Department of Energy. And the last one is mining taxes. So the collecting agency is Bureau of Internal Revenue. Legal basis. In addition to the Internal Revenue allotment, LGUs are also entitled to 40% of the gross collection by the national government from the preceding fiscal year out of the proceeds derived from the utilization and development of national wealth within the LGU's respective areas. So in addition to the money they receive from the central government are also called the Internal Revenue allotment. Local government units or LGUs in the Philippines also get a share of the income the national government earns from using and developing natural resources in their areas. Specifically, LGUs are entitled to 40% of their income from the previous year. So this role is laid out in sections 289 and 290 of Republic Act number 7160 or also known as the Local Government Code. So LGUs shall also have a share from proceeds derived by any government agency or government-owned or controlled corporation engaged in the utilization and development of the national wealth based on the following formula, whichever will produce a higher share for the LGU. So the first is 1% of the gross sales or receipts of the preceding calendar year. The next one is 40% of the mining taxes, royalties, forestry, energy resources production, and such other taxes, fees, and charges, including interest and fines, the government agency or government-owned or controlled corporations would have paid if it were not otherwise exempt based on the Section 291 RA number 7160, Article 388 IRR of Republic Act number 7160.
So good morning everyone, I am Joyce Fernolias and we will talk about the distribution of shares. So in section 285 of the Local Government Code or LGZ as implemented by Article 382 IRR of RA number 7160 provides the caudal formula or the manner of allocation of the era share prescribed by code for the 4 levels of LGU. So, this is the era share per LGU level. The barangays, provinces, cities, and municipalities. In barangay, there is 20%, and provinces na ay 23%, and municipalities na ay 34%, and sa cities is na ay 23%. When we say caudal formula, ga-refer ni siya sa prescribed by the law, specifically the Local Government Code of the Philippines or Republic Act number 7160 for allocating the internal revenue allotment or ERA among the different levels of local government units or LGUs. This ERA is a crucial component of local government financing in the Philippines as it represents the share of LGUs from the national internal revenue taxes. So this is the illustrative examples showing the shares of provinces, cities, barangays, and municipalities using the caudal formula. Within these categories, the funds are further distributed among individual LGUs based on a formula that takes into account the following factors, such as, first one is the population. So in population, there is 50%. So this means that half of the area for each category, provinces, cities, municipalities, barangays, is distributed in proportion to the population of the respective LGUs. So the area shared based on population is computed using the population data from a census of population conducted by the Philippine Statistics Authority every 5 years as contained in a presidential proclamation order. And land area naman na ay 25%. So a quarter of the area for each category is allocated based on the land area of the LGUs. So the area share based on land area is computed using the Consolidated Master List of Land Area prepared by the Land Management Bureau or LMB of the Department of Environment and Natural Resources or the DENR every 3 years. Lastly, the equal sharing. So, kining equal sharing na siya 25%. Same sa land area. So, this equal sharing is the remaining quarter is distributed equally among all LGUs within each category. So, the allocation of the individual share in the case of barangays shall be 80,000 pesos for each barangay with a population of not less than 100 inhabitants. The balance to be distributed shall be based on population or the 60% and equal sharing 40%. So that's why the caudal formula under the Local Government Code of the Philippines allocates the area in the following manner: that provinces receive 23% of the total area, and the cities receive 23% of the total area. Then the municipalities receive 34% of the total area. Then, lastly, the barangays receive 20% of the total area. So, each level of LGUs further distributes their share based on 50% population, 25% land area, and 25% equal sharing. So this system ensures a balanced allocation of resources, taking into consideration the size, population, and equitable distribution among local government units.
LGU share from proceeds of national wealth shall be used to finance local development and livelihood projects of the recipient LGU. In the case of proceeds derived from the development and utilization of hydrothermal, geothermal, and other sources of energy, 80% of the proceeds shall be applied solely to lower the cost of electricity in the LGU when such source of energy is located. In Section 294 Republic Act Number 7160, Article 391, IRR of Republic Act Number 7160, the uses of the funds is a project level accounting of all project costs across all categories. In the case of any government agency or government-owned or controlled corporation engaged in the utilization and development of the national wealth, such share will be directly remitted by the government agency, government-owned or controlled corporation concerned to the provincial, city, municipal or barangay treasurer within 5 days. After end of each quarter, in Section 293 Republic Act Number 7160, Article 390B, IRR of Republic Act Number 7160.
Fund release procedure. In this topic, we will be discussing the guidelines and procedures set forth by several joint circulars that govern the release of LGU share in the first proceed from the utilization and the development of national wealth. Let's begin by looking at the first joint circular. This is the DBM to DOF to DOE Joint Circular Number 2006, dated on February 13, 2006. This circular, issued by the Department of Budget and Management, the Department of Finance, and the Department of Energy, outlines the initial guidelines for the release of LGU shares. The circular provides a framework that ensures transparency and accountability in the fund distribution of fund to LGU. It established the necessary procedure and requirement that LGU must comply with to access their share of proceeds. Moving on to the next joint circular, which is the DUF to DBM to DILG to DNR Joint Circular Number 2009-1, dated on March 31, 2009. The circular, issued collectively by the Department of Finance, the Department of Budget and Management, the Department of Interior and Local Government, and the Department of Environment and Natural Resources, built upon previous guidelines. The aim of this circular is to further streamline the release procedures and enhance coordination among the relevant government agencies. It emphasized the importance of timely, efficient fund disbursement, ensuring that LGUs receive their share in timely manner. Let's now discuss the DNR to DUF to DBM to DILG Joint Circular Number 2010-1, dated June 25, 2010. Their circular, issued jointly by the Department of Environment and Natural Resources, the Department of Finance and the Department of Budget and Management, and the Department of Interior and Local Government, introduced the additional guidelines for the release of LGU shares. Their circular focuses on the utilization and development of national wealth, stressing the needs for sustainable practices and responsible stewardship of resources. It aims to ensure that LGU utilize the fund received effectively, contributing to the overall growth and development of their respective communities. Lastly, let's explore the F to DBM Joint Circular Number 2016-1, dated on January 4, 2016. This circular, jointly issued by the Department of Finance and the Department of Budget and Management, provide the most recent guidelines for the release of LGU shares. Their circular focuses on the further streamlining the fund release procedure, enhancing transparency, and improving the monitoring and reporting mechanism. It emphasized the importance of accountability and compliance, ensuring that LGU receive their rightful share while maintaining the highest standards of financial management. So, figure number 15, which is the fund release procedure of LGU shares and the proceeds from forest charges, royalties from mineral reservation, mining taxes, and energy source production. The collecting agency, which is the Bureau of Internal Revenue or BIR, the Department of Environment and Natural Resources or DENR, the DENR Mines and Geoscience Bureau or MGB, and the Department of Energy submit to DBM or Department of Budget Management a certification of the projected total share of LGU based on the immediate preceding year collection as basis for provision of appropriations cover. During the budget execution, the collecting agency and the BTR submit to DBM a reconciled certification on actual collection and actual remittance from the immediate preceding year. So, based on the reconciled certification submitted by the collecting agency and BTR, the DBM prepares and releases the corresponding release documents to the BTR. So, the BTR in turn downloads the fund through the Insurance of Authority to debit account to the AGSBs, which credits the shares of the beneficiary LGUs to their respective account.
Good day, Ma'am Eden. I am Justin Alfonso. So I have been given a task to discuss the share in the gross income taxes paid by all businesses and enterprises within the ecozone. So, legal basis. RA number 7922 and DBM DOF Joint Circular number 2 dated August 17, 2014 This RA is the guidelines and procedures on the release of the shares of local government units from the gross income earned by all businesses within the Cagayan Special Economic Zone for FY 2012 and subsequent years. So this RA, an act establishing a special economic zone and free port in the municipality of Santa Ana and the province of Cagayan, providing funds therefore and for other purposes. So kaning RA, nag-establish sila special economic zone and free port in the municipality of Santa Ana, which is kaning port makatabang sa municipality from importing and exporting goods, not only mga pagkaon but also mga gamit or equipment that will be used by businesses inside the municipality. This RA shall cover the entire area embraced by the municipality of Santa Ana and the islands of Fuga, Barit, and Mabag in the municipality of Apari, province of Cagayan. So under ning RAs, section 4, nakasulat dito nga the framework and limitations of the Constitution and applicable provisions of the local government code. The zone shall be developed into and operated as a self-sustaining industrial, commercial, financial investment and tourism recreational center and free port with a suitable opportunities in and around the zone, and to effectively encourage and attract legitimate and productive foreign investment therein. So katong nga port is very helpful no para mas ma-improve ang ilahang municipality. Just like for example diri sa ato ang ato ang connector nga bridge from Davao to Samal. Dako kay na siya impact or tabang sa mga sa Samaleños because natay madawat nga bagong mga opportunities and also mas ma-improve ato ang isla, daghanag mga mag-invest, daghang mga businesses, and through all of that dapat di nato kalimtan nga i-preserve gihapon nato atong beauty sa ato ang isla. Note, the other shares of LGUs in Ecozone, such as those under Republic Act number 7227, are already remitted to the beneficiary LGUs pursuant to Republic Act number 9400. So katong share sa LGUs in Ecozones is remitted na to daan sa beneficiary of LGU pursuant under sa Republic Act number 9400. So that would be all sa akong part. Thank you.
So, computation of shares. Local government units within the Cagayan Special Economic Zone or CSEZ are entitled to a share in the 5% final tax on gross income earned or GIE paid by registered enterprises within the CSEZ as follows: 1% to the province of Cagayan and 0.5% to be shared by the municipalities affected by the declaration of the zone in proportion to their income from businesses activities within the zone. So the computation process, first is you need to determine the total GIE tax. You need to calculate the total 5% GIE tax collected from registered enterprises within the CSEZ. And second, allocate shares 1% to the province of Cagayan. Multiply the total GIE tax by 1% to determine the share from the province of Cagayan. And then 0.5 or 0.5% affected municipalities. Multiply the total GIE tax by 0.5%. Distribute this amount among the affected municipalities based on their income from business activities within the zone. So example of calculation. Let's assume that the total GIE tax collected is 10 million pesos. And then, the province of Cagayan, na sila'y makuha nga share sa 10 million pesos nga 1%. So, na sila'y 100,000 pesos. And sa affected municipalities, na sila'y makuha nga share sa 10 million pesos nga 0.5%. So, na sila'y 50,000 pesos. So if the municipality A has a 60% of the total business income and the municipality B has 40%, so the municipality A received the 50,000 pesos. If 60%, masad sila ay 30,000 pesos. If the municipality B receive 50,000 pesos, so naa sila ay 40% nga madawat nga 20,000 pesos. So by following this method, the share from the GIE tax are equitable distributed among the province of Cagayan and the affected municipalities within the CSEZ, ensuring that the economic benefits are shared based on the contribution of each area.
A pleasant day to all of us. At this juncture, we will tackle about the 3.4 fund release and procedures, which is under the same from 3.3 share in the gross income taxes paid by all businesses and enterprises within the eco zones. First, we will just have a short recap about what is eco zones. Well, according to Rasori E and HLR 2024, the eco zones, or commonly referred to as special economic zones, is an area in a country that is designed to generate positive economic growth. However, what are these designated areas that can generate positive economically? In accordance to the Republic Act 7916 as amended by the Republic Act number 8748, or commonly known for an act providing for the legal framework and mechanism for creation, operation, administration, and coordination of special economic zones in the Philippines, creating for these purposes the Philippine Economic Zone Authority, or the PEZA or PEZA, and for other purposes. As stated in Section 4, Paragraph A, that an eco-zone may contain any of the following. First is the industrial estates, or IES. Second, export processing zones, EPZS. Third is the pre-trade zones, and fourth is the tourist recreational centers. Firstly, what is industrial estates? Industrial estates, it refers to a tract of land subdivided and developed according to a comprehensive plan under a unified continuous management plan and with provisions for basic infrastructures and utilities, with or without pre-built standard factory building and community facilities for the community of industries. Secondly, the export processing zones, or the EPZs, a specialized industrial state located physically and or administratively outside customs territory, or dominantly oriented processing zones, are allowed to import capital equipment and raw materials free from duties, taxes, and other import restrictions. Fourthly is the free trade zones. It is an isolated area adjacent to a port of entry as a seaport and or airport where imported goods may be unloaded for immediate transshipment or stored, replaced, sorted, mixed, or otherwise manipulated without being subject to import duties. However, movement of these imported goods from the free trade area to a non-free trade area in the crown country shall be subject to import duties. Enterprises within this zone are granted preferential tax treatment, and immigration laws are more lenient. Lastly, the tourist recreational activity that refers to the establishment that caters both local and foreign visitors for eco-zones. Let's move on to the fund release procedures. For budget preparations, the BIR submits to the DBM on or before March 15 of every year of certification on the total computed LGU shares based on the actual revenue collections corresponding to the 30% of the total final tax collected on GIE for the base year, which is 2 years immediately preceding the current year. Secondly, during the budget execution, the BIR and the BTR submit reconciled certification of actual collections and remittances to the DBM. Thirdly, based on the reconciled certification submitted by the BIR and the BTR, the DBM prepare and reaches the corresponding release documents to the BTR. Then lastly, the BTR downloads the fund through the issuance of authority to debit account to the AGSBS, which credits the shares of the beneficiary LGUs to their respective accounts. That's all. Thank you.